ladies and gentlemen, distinguished colleagues and guests. Thank you for the opportunity to present our recent research. My name is Putu Anindya Sarasija Prameswari, and I'm honored to be here with my esteemed research partner. They are Kadek Marlina Nalarreason and Komang Andriadi. Together, we have collaborated extensively on the research titled Do Investors Trust Policy Signals? Market Reaction to DANANTARA in the Indonesian Stock Market. This research investigates how DANANTARA's announcement affects abnormal returns and trading volume activity in IDX 30 stocks, a topic of considerable importance for investors and market analysts seeking to understand market reactions to corporate news. We look forward to sharing our findings and engaging in a fruitful discussion that will contribute to advancing knowledge in financial market behavior. So, let's start our presentation.
Hi everyone, thank you for being here with me today. I'm really thrilled to explain our research. Our research basically is about Indonesian market reaction when the government give us a new information. So yeah, without further ado, let's get into it. But before that, let me share you the presentation. Okay, I hope this presentation shows properly in your screen. Okay, right. Let me begin with the explanation about the introduction. So as we know, our President Prabowo Subianto has launched Danantara on February 24, 2025. But do you know what is Danantara? Danantara stands for Daya Anagata Nusantara. It's a strategic agency to consolidate and optimize government investment. This also signaling a new direction in Indonesia financial governance. The government of Indonesia presents Danantara as a symbol of a new era in efficiency, accountability, and digital asset management. But the interesting part, when the first day of launch Danantara, INDEF note a contraction in our stock market or Indonesian stock market. Our market did not react positively to that information, to that launching of Danantara. Why is that so? This move is really big and bold to give us a hope in the new era of efficiency. Why did not get the positive reaction? This raised a question. How do investors react? And the second is the signal credible, consistent, and trusted? So to test that phenomenon, we use two indicators. One is abnormal return that defined as the difference between actual return and expected return. And the second is trading volume activity that reflects changes in the intensity of the stock trading as a response to new information. We also use grounded theory to support our research. The first is the efficient market hypothesis that suggests that in efficient markets, stock prices adjust immediately to new information. In contrast, inefficiencies lead to abnormal price or volume deviations. And the second theory that we use is signaling theory that says informed parties or the government send signal to others like the investor to reduce uncertainty. The market trusts signals that are very clear, consistent, and credible. But if it's not, investor may respond with caution or doubt. We also found the mixed result from the past studies that from Kisti et al., Kinasi and Laduni, Saputra, Sari, and Setiawan, all that researcher found that mixed results when the government gave the information to the stock market. There is found the abnormal return, there is a significant difference in abnormal return, and there is no significant difference in abnormal return, but also found that on trading volume activity, there is no significant difference in that variable. So there's so many mixed results that found about this topic. So yeah, from that inconsistent finding showed that market reaction to strategic event or policy announcement is very contextual and influenced by the complexity of information and revealing market conditions. In this case, There is no specific research yet examining market reaction, particularly in abnormal return and trading volume activity before and after the launch of DANANTARA. That's triggered us to dive in more in this topic. First is there's so many inconsistent results, and the second is there is no specific research to test about this DANANTARA information launch. So yeah, we focus on two problem identification. So first is there a significant difference in abnormal return before and after the announcement of DANANTARA? And the second is there is a significant difference in trading volume activity before and after the launch or the announcement of DANANTARA. And also, of course, we found the objective of the research is to solve the problem identification. I think that's the background of this research. I'll hand it over to the next presenter to dive in or to give you more explanation about the literature review and also hypothesis, methodology, and the results. So yeah, thank you for the time. See you on the last part.
Now, I would like to explain about literature review and hypothesis in this research. Abnormal return serves as a metric for assessing market response. The production of abnormal returns in investment operations might be impacted by changes in stock prices. If we link with the grand theory, the efficient market theory approach, which contends that stock prices reflect all pertinent and publicly available information, provides a more appropriate explanation for this event. Research results from Isan et al. At 2024 revealed that there is a difference in abnormal returns both before and after the announcement of the 2024 presidential candidate pair. So, the first hypothesis in this research say there is a difference in abnormal returns before and after the announcement of DANANTARA. The ratio of shares traded at a given moment to shares outstanding at the same time is known as the trading volume activity. If we link to the brand theory, signaling theory has a significant impact on how investors view the company's future, which in turn stimulates greater investor interest in making deals and raises stock trading volume activity. Based on Pageranti's research result at 2024, say that trading volume activity has increased after the implementation of the general election. This is because when the election is over and it runs smoothly, many investors who previously installed a wait and see position will again increase their enthusiasm for investing in the capital market because investors believe that the smooth running of the election process will lead to better economic growth. So the second hypothesis in this research say there is a difference in trading volume activity before and after the announcement of DANANTARA. About research method and results in this research, we'll explain with my partner.
Halo, salam harmony for everyone. My name is Komang dan Andriadi. I will continue the presentation about research method. This research uses a quantitative methodology with an event study approach. The event date is 24 February 2025, which marked the official Danantara announcement. The population in this research consists of company listed in the IDX 30 stocks index. Every company was included in the analysis, or we know as the total sampling technique. Using secondary data from the official website of the Indonesian Stock Exchange and Yahoo Finance, we calculated the abnormal return and trading volume activity from the data. This study used required sample t-test for normally distributed data and the Wilcoxon rank test for non-normally distributed data. The Shapiro will test is used to assess data normality. Okay, now moving to the next slide about the research result. The first hypothesis is rejected, which means there is no difference in abnormal return before and after the DANANTARA announcement. Then the second hypothesis is accepted, which means there is a difference in trading volume activity before and after the DANANTARA announcement. Okay, that's all from me. The discussion section will be presented by Putu Anindya. Thank you.
And now I would like to explain about discussion in this research. The first hypothesis result is there is no difference between the abnormal return before and after the DANANTARA announcement, so the first hypothesis is rejected. Based on the semi-strong form of efficient market theory approach, an efficient capital market at this level has reflected all public information into the stock price. This means that any publicly announced information, such as the DANANTARA announcement, has been anticipated or even reflected in the stock price before the official announcement was made. IDX30 stocks are generally owned by institutional and professional investors who have deeper analytical skills and faster access to information. As such, they don't react emotionally to announcements that are considered to have no real impact on the intrinsic value of the company. Their reactions tend to be based on information that is truly material and relevant. Okay, next about the second hypothesis results say there is difference between the trading volume activity before and after the DANANTARA announcement, so that the second hypothesis is accepted. Some investors see the announcement as a positive signal of the company's long-term performance, while others may be skeptical as they have yet to see any direct financial impact. Trading volume activity increased significantly, indicating that the market responded to DANANTARA's announcement not through direct price changes, but rather an intensification of trading activity. This is evidence that public announcements, especially strategic and long-term ones such as DANANTARA, still have relevant information value for investors, especially in the context of large-cap stocks such as IDX30. But conclusion, limitation, and suggestion in this research will explain with my partner.
Hi everyone, back again with me. So yeah, in this part, I'd like to present the conclusion, limitation, or the suggestion of this research. So before that, let me share you the presentation. I hope this presentation shows well in your screen. Yeah, okay. So first is the conclusion. So basically, we found that there is no significant difference in abnormal return, but trading volume activity was changed significantly. This also suggests that the investor reacted to the announcement, though the signal wasn't strong enough to affect the stock prices. This indicating possible market inefficiency or weak information signaling. Moving on to the implication. So basically the findings suggest that the Indonesian capital market has not fully reached semi-strong efficiency, as a public information does not always affect stock, but does influence trading activity. So it emphasized the need of transparent and credible disclosure. So it can boost investors to consider both price and volume when interpreting market reactions, and calls on the regulators to enhance disclosure quality to build trust and efficiency. Next, limitation. So the limitation of this study has some limitation. So first is not all investors get information at the same time and the same way, which can cause different results and effect. And second is using daily data makes it hard to see very quick market responses. And without intra-data, short-term changes might be missed. Also, if the information is shared at different times, it's harder to know exactly when the market reacts. And last, global events during the study period might affect the market and make it harder to see the true impact of the announcement. So the recommendation from this research to investors are advised to consider trading volume as an important indicator alongside stock price to better understand market sentiment. Second is for regulators should focus on providing clearer and more timely information to improve market reaction and investor confidence. And the last, for the future research, should use more detailed data like intraday price or longer event windows and may explore specific sector or announcement types. So incorporating sentiment analysis can also help reveal deeper investor responses. So I think that's all for this section, the conclusion, limitation, recommendation, and the implication. I give it back to the Miss Anindya for the presentation. Thank you for your time. See you next time.
In conclusion, our study provides valuable insights into the dynamics of abnormal return and trading volume activity in IDX30 in response to DANANTARA's announcement. We believe these findings can help investors and market participants better understand how such corporate announcements influence market behavior. Thank you for your attention and we welcome any questions or discussions.